started my legal career as a discovery paralegal at a class action plaintiff law firm. So at that time, I thought I was Erin Brockovich. I was involving in large-scale class actions. And then I moved into a small practice doing litigation, family law, a lot of divorce, commercial. So I was basically fighting for money for my clients. And then I founded my legal practice called De Novo Legal with a mate of mine. He's a migration lawyer. So at the moment, I maintain my litigation practice as well as commercial and property. So I do a bit of everything. Now, today, I'm just gonna give you guys a bit of introduction to the whole litigation process, touch on a bit about bankruptcy, and what happened to your assets if they're exposed, especially in the litigations, if you have a judgment from the court or settlement debt, the how and the why about asset protections, and my favorite topic, divorce and family law, and about Brad Pitt and Angelina Jolie. Yeah. Angelina Jolie, there you go.
Raise your voice, come here.
Sorry?
Raise your voice a bit more.
Raise my voice? Okay. Look, after this presentation, I hope that you feel concerned that you haven't got any asset protections in place. So who here run the business? No one? Okay, only one. What about you, Sam?
I don't run business.
You don't run, okay. Well,
Just got that.
who here runs something that earns money or owns something that earns money? Okay. I'm talking to the wrong club now. Anyway, well,
Let's go back.
okay. Yeah, I try not to present any heavy material like Ming. I want you guys to sit back, relax, and drink your wine, and hopefully I can entertain you a bit like Harvey Specter here. Okay. All right, litigations. Who's the dentist here? Doctor? Business owner? Oh, there was one, too. Employers. Raise your hand. Employers? One. Husbands. Husbands?
Maybe.
A lot of eligible bachelors here.
It depends.
Wives. Any wives here? Okay, one. A lot of eligible, young ladies here. Accountants. Lawyers. Oh, these people, apparently they are prone to being sued. Okay. Now, I thought I had covered everyone. I thought everyone would be at least a husband or a wife. No, okay. Anyway, so the fact is a lot of people didn't think that they would be sued, but unexpectedly, they got hit by a lawsuit. So the whole litigation process would be like that. Say, John, he comes to me and he say, you, Milton, you upset John. You're a very mean person, okay? And he say, I want $1 million from Milton because he pissed me off. So what's the first step that I do? I'll send Milton a letter of demand. And I'd say, hey Milton, I act for John, and John is not happy about what you did to him. And under the law, he's entitled to $1 million damages from Milton. Pay us $1 million within 14 days. So Milton would say, nah, hang on. Nah, I admit that I did something wrong, but maybe it's $250,000. $250,000, would you take it? So Milton sent a letter to me, or his lawyer sent me a letter and say, I offered $250,000. So we start to have these negotiations. And I talked to John. John said, no, at least $750,000. So I went back to Milton's lawyer. The lawyer said, nah, bottom line, 500, $500,000. Take it or leave it. We leave it. So John said, bring Milton to court. Well, sorry, that was before. Bring him to court. So $1 million claim, that means it's a Supreme Court claim, depends on what claim it is. It could be a federal court. So I brought Milton to court. And then we go through the discovery, walla walla, subpoena. We appear in court for a few times, and then we still fail to settle. So in the end, we went all the way to final hearing, and then there's a judgment. And at this stage, Milton and John would have already paid 6 figures to myself and Milton's lawyer. Yeah, we're the winners. Yeah. And then we went through the whole final hearing, and then there's a judgment. The judge say, "Oh, Mr. Milton, whatever your surname, you're a very mean person. You really hurt John's feeling, and you have to pay him $1 million." Oh shit! Milton says, "Shit. Do you have $1 million in your bank?"
No, we appeal.
You appeal, okay, great.
You're making more money.
You will be paying another 6 figures to appeal. But there you go, here's your judgment day, $1 million. But I don't know if you have $1 million in your bank. If you do, then yes, you can pay. But if you don't, that means you can't pay. So what's gonna happen if you can't pay? Guess what's gonna happen? What would you do, Milton?
Bankrupt.
That's right, or you can run for your life. You want to flee the country?
Yeah,
Go to Asia somewhere?
This is pretty good this year.
Yeah. But yes, that's right, bankrupt. So
Can I ask a question? Is there extradition treaties in Greece?
we'll get back to that. Yeah. But ask yourself, is this the only way out? Okay. Now, because you don't have $1 million in your bank, and because you personally hurt John, you have maybe $2 million home in Toorak, but you have $1 million in debt, so that will give you $1 million net. So maybe John wants to live in the Toorak home. Yeah? Okay. Anyway, so that might be the only way, but that might not be the only way. So if that's the only way, then you have to apply for bankruptcy, or John, he will take the judgment to you and start recovering money from you. If you can't pay it, he as a creditor can apply for it. And the consequence of that is that you'll be a bankrupt. You can't run a company for 3 years or even more. And you have a second wife. Guess who? A trustee of your bankruptcy. So a trustee will basically control your money and your movement, so you can't really go overseas. So you can't really go to Phuket, sorry. But no, that's not the only way out. So you can pretty much negotiate with John and say, hey, can I come up with an agreement? Maybe I'll pay you 10 grand per month. Personal insolvency agreement. You talk to John and say, whatever installment that you can come up with, or you have a system barter and pay him by giving your service whatsoever. So under the, let's just say that you do have to go through the bankruptcy process. Under the Bankruptcy Act, your property means real or personal property of every description, whether situated in Australia or elsewhere, and includes any estate, interest or profit, whether present or future vested contingent arising out of or incident to any such real or personal property.
What happens, Claire, if that property is jointly owned?
Well, that's a bit of a tricky situation, but it will still fall in the bankruptcy process. So your wives, unless secretly
They divorce?
tell you, well, not divorced. You don't have to be divorced to be able to. Your wife doesn't have to be divorced from you to be able to get a bit of interest from that property. So she can pretty much file a claim in the family court. And see, I can tell you that a lot of the bankruptcy proceeding coincides with a family court proceeding because of that reason. That's a good point. That's a tip as well.
So
Anyway.
if she files a lawsuit in the family court...
Why are you so interested?
Oh no! Well,
If she files a law in the family court, that means then does family court take precedence over bankruptcy?
unfortunately, it would, because family court has a much wider power to do anything.
There you go.
Yeah, but the trustee of the bankruptcy will be part of the your matrimonial dispute as a third party. Yeah, so it will, but the two proceedings will run at the same time. but the trustee of bankruptcy will join in the family court proceeding because they should, because they want to fight for the maximum percentage in your family home, in your matrimony home. Yeah.
So they'll represent me in the family court for free.
Not really. They actually act for the creditor. They don't act for you. Yeah. But whatever money that you get in the family court proceeding belongs to the creditors. So you don't get shit. You get nothing. Yeah.
So I'll agree to give it to the wife 90-10.
You might as well just give it to your wife. That's right. Treat her nicely. Yeah.
I like this.
Anyway, this definition is a very, very wide one. I don't even understand what it means. So I'm not sure if anyone here understands every single words of these definitions, but I don't. But anyway, there's a bit of exception here in section 1162. Now, section 1162 says there are some exception to property that can be divisible in the bankruptcy proceeding. That includes personal property that has sentimental value for the bankrupt, such as your jewelry or your sports car that you really love, and you have your first keys in your sports car. Maybe you can keep that. Or 2, used in earning income not exceeding limit prescribed in the regulations. I think it was $3,000 or something, $3-4,000. Household properties, so your fridge, you can keep your fridge. Any property the bankrupt is required to transfer to their spouse or former spouse under the Family Law Act. Milton, you were right. Yeah.
Question.
Yes.
So it means that I can.
Here, who is a sole trader?
I'm so.
Really?
Can I say I'm so trader?
I'm sorry. Okay. Who's in a partnership?
You needed a accountant to me.
Yeah.
Who's in a partnership?
Different.
No? They're pretty bad business structure. Look, I'm surprised that Monk has not got a company, because setting up a company costs nothing. It's like $500 and you have a shell. Anyway, yes, company, discretionary trust, unit trust are the better business structures. And if you run a business, or if you consider running a business, whether you want to sell, I don't know, sushi or whatever, skewers, consider using a company. Consider being a shareholders, not being a shareholders, I take that back. Considering setting up a family trust and a corporate trustee, and let it be the shareholder and you be the beneficiary. Do you get that?
Yeah.
Monk can do all that, I believe.
Yeah, I can register all the business structures
Yeah.
together with the tax benefit. Right?
There you go. Now, however, who thinks that having a PTY Ltd means that you as the director or shareholder is bulletproof? Who thinks that? Very good. Now, directors, beware, because you're not bulletproof. We've got a case where directors were sued by liquidators when the company was put onto voluntary administrations. And what the liquidator say was basically, oh, you director, you have traded while the company was insolvent. They love these allegations. And they say, look, we have few creditors here, including SRO and the ATO. And they say that, you know, ATO paid you liabilities are blah, 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 this much, SRO this much. So because you committed insolvent trading, you gotta be personally liable for this $1 million debt, which is the SRO payroll tax and the paid you liabilities. So there you go, being a director having a shell, you're not that safe after all. And also you have director's duties. They always say that you did not act in the best interest of the company, you did not act in good faith, voila voila, proper cause, proper purpose. Now, let's just say Milton, because I used in my previous example. So John wanted to sue you, and the first step that he said, hey, let's check what Milton has. I said, okay, I'll run the search. So I put in your name, and then that's it. I asked the client to pay $179, and I searched, and I ordered a search, and it will show all the properties that Milton has. Well, in Australia though, not elsewhere. So that is how, if you hold your assets in your personal name, you get exposed. It's only $180.
Where
And
do you
guess
get the
what?
form from?
Sorry?
Where do you get the form from?
InfoTrack,
Okay.
or get it from me. But you gotta pay $180 and my hourly fee.
Oh, Milton.
Anyway, so let's just say I found that Milton has a $2 million beautiful property in Toorak.
Shit, where is that? I knew I had some problems.
So John say, oh shit, if I hit him with a lawsuit, does it mean that he might wanna, he might move around his property, max out the debt? That means he's poor. That I can't get my money back, I can't get my $1 million back. So I said, don't you worry. I can freeze his assets. I say, let's put a caveat on the property. You don't have any caveatable interest, but I'll do it anyway. I don't care. It costs $50 in 2 seconds to do it, by the way.
Can I ask a question? If,
Yeah.
if there's a caveat on the property, right, and look, the liquidators wind you up and they get to sell your property, they have to honour that caveat, don't they?
They have to what? Remove the caveat?
Well, they have to honour it. So, say for argument's sake, Sam put a caveat on my property
Yeah.
and I owed him $1.9 million.
So you say that you went through bankrupt and there was, because it's not a property, it's thing in your account, and somehow we have intelligence and we know that Milton has $1 million in his bank, and I say, ooh, we better freeze that. So we can apply to the court. If it's a Supreme Court, we apply for freezing order. But the trouble with freezing order, and good news for you guys, is that it's very, very hard to get a freezing order from the court. Now these are the law. It says that the purpose or the objective of the freezing order is to prevent frustration of the process of the court, or by seeking to meet a danger that a judgment or prospective judgment of the court will be wholly or partly unsatisfied. That means the Milton could pay John $1 million. And it can be made without notice to you, but not granted lightly. It's a very, very difficult case to run to seek freezing order. Okay, now to asset protections. No? Okay. Well, you want to protect your assets in your personal name, or assets that you control, from creditors, public liability, professional liability, personal relationship breakdown, like with your wife, with your husbands, or with your kids, business relationship breakdown, like with your partners, joint ventures, protect your estate beneficiaries. So these are the reasons why you should have asset protection in place if you're running business or if you're doing something that earns you money. But there are lots of misconceptions, especially for people who first started doing business. They think that it's for business owner only. Sorry, skip that. Okay, that's wrong. And they think that it's for the wealthy. Or we have some wealthy men here. Tell us whether that's true. It's probably not. The wealthy man say, if there's a judgment that of $1 million, I think the wealthy man can easily draw $1 million from his bank to pay the debt. But for poor people like myself, I don't have $1 million, I have $1,000. What am I going to do? That's why I need asset protections. And also, a lot of people think that it can be done later, like when you're 80 years old. Or people think it's illegal. That's wrong, because it's structuring, it's being creative around the laws, not illegal. Well, they think that asset protection is for those people who are prone to being sued. That's wrong, and they think that it's when you start to have legal problems. Well, I mentioned the clawback provisions. Now, they also think that it's expensive. It is expensive. Accountants and lawyers, they are very expensive, but it's worth it. So if you pay 10 grand, save you $1 million, what do you think? Good deal? Is it good deal? Yeah? Okay, now the how. First, keep your business assets from business operations. So if your business is buying a really, really expensive equipment, you want to put it under another structure. let's just say that you run a company of ABC Proprietary Limited and you sell sushi. And you own a really good sushi machine that automatically put sashimi and rice and seaweed together. That costs you $1 million. You may want to consider using another structure, creating another company or family trust whatsoever to hold that equipment so that your trade, the trading or the activities of selling sushi are different from the equipment. Do you get that? So you have ABC Proprietary Limited that runs the business, but you have BCD Proprietary Limited that owns the equipment. So you want to separate them, totally separate. If you have 10 different equipments, separate them, have 10 companies. Is that right, Meg?
No,
Okay, well, people have their different perspective. Anyway,
it's too expensive to make.
it is too expensive, yes.
You can pull everything together under one entity. That's fine.
I think probably you can have one entity that holds 5 assets.
Yeah, that's okay.
Yeah, that's okay. Not 10, 5.
Yeah, don't get rid of by accountants. Sometimes some accountant want you to just have more companies because they can charge that year end.
That's right. I love that. Thank you. Always separate your family life from business, because you don't want to, especially if you own your matrimonial home or your family home in your personal name, you don't want to then own another business or like run another business as a sole trader, because that means your family home will come into play when you upset someone and someone sue you. Now, I mentioned that you can use structures, so discretionary trust, that means family trust, and better to have corporate trust. It's expensive, but look, corporate trustee, family trust can hold up to 5 assets or 10 assets, so that's value for money. Now, the other way to do your asset protection is to transfer your assets to a low-risk spouse. So it's stamp duty exemptions. CGT may apply depending on circumstances. But of course, if your spouse is, if you're in a really bad relationship or that Brangelina situation, maybe not. Now the other ways are to max out the home loan, increase the home, just get the withdrawal, get insurance, always get insurance, public liability, income protection, professional indemnity, building insurance, etc. And just try to be nice to people and do the right things so you don't get sued. Seriously, that is the one tip. Be nice to people. If you're nice to your employee, they won't take you to fair work. Probably. Right? Can't. Alright. Now, downside of becoming bulletproof, there may be capital gains tax. Is that right? Stamp duty and lawyers and accounting costs are quite expensive. That's it for asset protections. I'm moving forward to my favorite topic. Guess what?
John?
John? Yeah. Well, pretty close. There you go. We're talking about Brad Pitt and Angelina Jolie. Well, someone's mother said don't marry for money, divorce for money. I think that's pretty true. But I'm going to briefly touch on this. It's my favorite topic, but I'm not going to spend the next hour talking about family law. Okay, let's just see what property means under the Family Law Act. It means what yours is ours and what's ours is mine. What do you think about that? It's pretty true, right? For a wife? No, sorry, it's not, just kidding. Well, it means property to which those parties are, or that party is, as the case may be, entitled, whether in possessions or reversions. I don't even know what it means. Now, it includes superannuations, interest in family company, and interest in discretionary trust. So, family trust isn't that safe after all, sorry.
Claire,
Yes?
just quickly, going back to that John scenario, right?
John?
Yeah, going back
Like
to John.
all the way back?
Yeah, you're suing for $1 million and you've got a superannuation and your super is valued at $5 million. Can the creditors touch the super?
Not the creditors, your wife.
Is John your boyfriend?
No,
Is John your husband?
No, going back to the person I hate, and
Yeah.
I treated him badly.
No, no, super
It
company.
depends. If you make a huge contribution, say 2 years, 5 years, or I don't know how many years before the bankruptcy, maybe
They can claw it back.
they can claw it back. But usually it won't. The default rule is that superannuation is
It's
for you
off
to
limits,
retire.
yeah.
But if you make huge contributions, like just right before the bankruptcy, you got clawback. There you go.
Your wife can get it.
Or unless if John is your boy, if John is your boyfriend, what I said to you, clawback exists in family court. It's the court is even more onerous. Family court can do anything, anything. Okay, so what do we do, husband and wife? What do we do? How do we protect our assets from our wife or husband? Do you want to have a guess? It's pretty common. You heard it on TV, you heard it on movies.
Prenuptial.
Exactly, prenup. So how do we bulletproof? Well, to be very honest, if you're in a relationship, de facto or marriage, you're pretty much stripped naked from your
But can that
spouse.
can that override family law?
I don't know. I can have a think about that.
Can a prenup override law?
Oh, can the prenup? Sorry, I thought can you?
No, not.
It depends. Look, if it's done properly, yes, but it's very, very easy to set aside a prenup agreement. Very easy. Indeed, I'm gonna talk about that in the next slide. Okay, prenup in the family law world, it's called a BFA, binding financial agreement. It can be made before, during, or after the relationship. It's better if you do it before. Always better to do it before. Now, in order to have a valid BFA, binding financial agreement, you have to disclose everything about your financial affairs. So if you have money overseas, if you have assets in, I don't know, Switzerland, you have to disclose that. If you don't disclose that, and if your wife finds out later, that whole prenup agreement or BFA is gone. Gone. So the purpose of BFA is to decide how assets are to be split in the event that you divorce or you break up. And it also decides that which asset will not be part of the property division, because when you go through a divorce and property settlement, your asset and your wife or husband asset will be joined. So they will consider, say you have $2 million in your net equity and the wife, have maybe 100,000. So you combine that. So that is the whole asset pool. It's what we call asset pool. But using a BFA, you can say that, well, let's just say that the husband is really well-off guy, come from a really good family and has a lot of family business. He can say, look, I'm not going to include my family trust, which is controlled by my parents, in the joint asset pool. I'm going to take that out. And wife, do you agree? And they say, all right, I agree. What can we do? I want to marry for your money. But that's fine. That's just part of it. That's just 10%. I'll get the 90%. So you can specifically say that, but you owe the money. I've got a client. They got into property development. They earn quite a fair bit of money, and they pay us 6 figure. In the end, they get 50,000 maybe. That's the win-win scenario in family court. So a piece of advice from me is that avoid family court at all costs. Be nice. Be nice to your spouse. Do it reasonably.
Be nice to John.
Don't be greedy. Yeah, I know in a lot of the situations,
Be nice to John.
wives. Sorry to all the women here. Wives are the greedier one.
No.
But men tends to hide their assets pretty well.
Really?
They hide it very, very well. I have a case where it's a really sad case. My clients, the woman, they were married for 5 years. She had 2 kids. 1 kid with the husband, so 1 kid with the ex-husband. The husband sold an intellectual property rights for $3 million. And then they altered the agreement, blah, blah, blah. And somehow we just couldn't see the $3 million. It's nowhere to be found. So we did all the disclosure, discovery, and I have to tell my client, look, because I was working for someone else, so I have to be accountable for my boss. So I said, look, can't be acting pro bono thing. Apparently, class action is the biggest thing. US is the top country for class action. Australia is, I think, number 2 or number 3. Bankruptcy is not fun, and your properties may be exposed if you haven't got exit protections, and you want to be bulletproof now. Just don't wait until you're sued. That's all, but